Facebook, live on LinkedIn, live on Twitter, live on Twitch, live a bunch of places. We're live on Zoom. Let's get the screen share up here. And off we go. Chat is open on YouTube. Chat is open in Zoom. Let's have a good sesh. Had a good meeting with a buddy of mine. Talked a couple of trade strategies. I was working on some indicator stuff last night. I do have some emails I need to get to. I saw those come in, either late last night when I was asleep or this morning. So anybody that's sent me some emails on the expected move indicator, which looks like this. Today, my pre-market levels. Let me sign back in. Give me my numbers. What are our pre-market tasty? What's our pre-market think or swim? Let's take the higher of the two. We're stuck between a couple levels. We have the low from Monday, which is around 67. 66.36. Sorry, 66.36 was the low from Monday, and then we have a gap to fill potentially if the market's going to head back up. So, decent little push this morning. Okay, fine. SPX pre-market for the 13th. I'm showing 74.03. Is that right? That seems a little high, doesn't it? Let's see. Thinkorswim 54. That seems a little high. Let me get out of this and get back into Tasty. 35.14. That can't be right. 50. I've seen a lot of 54s in there. Tasty is 74. Oh, snap. Okay. All right. Just want to make sure that was correct. I'm going to log back in and eliminate the 0DT. I had my computer on all night because I was running some AI stuff. Daniel hit the target this morning. Nice. Yeah, NQ's up about 0.4%. I saw your chart you posted on Telegram or on Discord. Nice work, dude. Okay, logging back in. No, Evan, it's just a yearly, $20. Just going to get logged into the dashboard for Tasty. Let me put in the So, again, interesting calculation. So yesterday, I said this during the final hour session. I jumped on for like 30 minutes with everybody yesterday to close out. There was a pretty noticeable price gap between. It's just it's an opening bell feed. So my price opened on TradingView at 67.26 or so. Let me see what this candle was. Open was 67.25 on my quote stream, and Thinkorswim it opened up at 67.40. My expected box was right at the lows yesterday. We closed at the lows yesterday, and this morning the market is up. So TradingView with the expected move box, we stayed safe. We had trades that were pending all day yesterday. I had to kind of modify. We had a little tiny, 10-cent broken wing butterfly that paid us 10 cents. I did end up putting in an in the money iron condor, which meant that my strikes needed to be below. I think my high had to be 67.60. So price stayed below 67.60 yesterday, and it stayed above 50. Then I pulled in some dollars. So I pulled in $140 here in order to risk 860. And I said I didn't post that for the service because I didn't like that trade. I didn't think that was really trade worthy because I was calling basically levels that were lower than my gap and higher than my levels we had talked about, maybe falling into like 66.50 on the nose. I didn't want to be right there, like needing prices say right up that threshold. So it worked out. I'm not sitting here bragging like, oh, look what I did yesterday. It's like I just put the trade on. I didn't think it was going to be great because I was playing defense literally below it and above it just in case it was threatened. So today is a new day. All right. A couple things I wanted to address today is yes, the market is up. We're gonna have another gap up. We'll get the box on here for a 70 something print. So I'm showing pre-market SPX at 70 plus. I'm going to take the higher of the two. So pre-market 74.03. 74.03. Now again, to me that screams expected is greater than the actual. That screams implied is greater than realized. But don't assume, right? It's like that seems pretty high when you've got Thinkorswim at 55. That's a big difference between opening levels. So we'll see what happens, but I'll just go ahead and mark that up. We're going 74.03. So I'll put this in expected box at 74.03. And this will print on a 1 minute time frame. And I'll put in another box here, text box 74.03. And so when we have the 1 minute candle confirm, it'll be gap adjusted. So we're going to be gapping higher. This will be by about 0.4%, maybe a little bit higher. Futures at 0.45. So we open up here. I will take that gap adjusted and measure 74 points. So my box should be sitting somewhere around probably around 67.70. 67.70 is going to be the expected move. As long as I can sell something in like the 6,800 zone, I kind of like that level for today. And then to the downside, we'll start at yesterday's close and go down 70, about 74 points. So 65.98 down here and about 67.75 or so up here. So again, within reason, that's about where I'm kind of calling that my box will print. Expect to move box, like I said, this is for $20. You can have this indicator if you want it. If you want the link, I'll send it in the Zoom chat. I can share it in YouTube as well. But I've got some more people in the back office I'll take care of today. We had a lot of traders yesterday. I think I'm up to almost 100 traders now that have the indicator, which is excellent. So, and you can trade this on, any asset, anything you want to trade with options. If you want to look at an expected move, you can trade this bullish or bearish. I tend to use this on the indexes for 0 DTE. What I'm going to look at today, in addition to today's 0 DTE, is I'd like to go out to maybe next Friday, looking at if I do the trade today, next Friday. So I might do this towards the end of today, going out to like a 7, or it'd be 7, 8, 9, 10 days, because I go Friday to Monday. So let me look at the calendar. Can I pull up a calendar here on this screen? Yes. So if I do the trade later today, I'd probably go to either the 20th expiration or the 23rd expiration. And I'll see what the implied volatility looks like, because what I'm thinking of doing is, if I've got anybody in my waterfall income class, then you may be used to that strategy 2 trade we've taken, right? So this is kind of a wrinkle on that strategy 2, but doing this to the call side. And again, not going out, 45 to 60 days, but rather going out like 7 to 10 days. And with this current structure in the market going slightly lower, I want to see if I can continue to maybe just sell some out of the money calls, but also build like a profit trap. So if we have our levels are just above these highs, just above these highs, just above these highs, kind of looking at the delta, right? Using like a 20 delta or 15 delta to start this thing out, go out, 7 days or 10 days. That way, if price is going to keep holding this kind of lower high and lower low structure until we get into a bigger level support. And I'd say right now, until we hit the 200-day moving average, I think this is a pretty good trade until we hit this 200-day moving average. So to me, we've broken we've got the 21 cross in the 50, the 21's cross in the 100. Price action yesterday, even if we go up today, it's like we're still below the 144. We're coming right into that 200-day. A touch of the 200-day gives us a chance to see, okay, what does this 200-day mean to the market? Let's see. Does it only work for options? The expected box move is based on it's options math. But you can look at this as a time. If you see the expected move boxes every single day going higher, so if you see expected moves are going higher, like the lows of the boxes are going higher, like you're in an uptrend, so you can obviously put on some moving averages and start buying it. But I primarily use this for a simple options trade. But you can put this on, SPX, NDX, SPY, QQQ, put it on oil, put it on gold, put it on silver, anything you like to trade options. And you have a high probability of, if the market will stay within the expected move, again, in almost every instrument, especially with a lot of liquidity, the implied volatility or the expected move, which is why I call this the expected move box, So the expected move is oftentimes greater than the actual. That is the formula for market makers to make billions and billions and billions of dollars every single day. Because what they do, look at Tasty. Today is 74.03 when Thinkorswim's showing 55. Maybe the market only goes 30, 40 points today. And Thinkorswim is spot on, but I'm going to take the safer number. And I know that seems high, but when the market opens today, this 74 might shrink to like 45. And if it shrinks to 45, we really should be selling premium at like 50 to 55 points away from price. But it's like, I'm going to be a little bit safer. I'm going to try to be safe. So anyway, this is where market makers do a lot of good. They make a ton of money doing this stuff. And when we had this like elevated VIX at 25, they're probably having a field day. Look at how many days we have had in the last 3, 4, 5 weeks. I mean, we got through a little holiday stint there in early January, but mid-January to now, it has been highly efficient where we've probably had maybe three inefficient days and maybe 50 plus trading days. And we're on a heck of a streak. I think we've had 52 out of 55 winners, something like that, in daily profit play. So anyway, that's just trading. So if you don't trade options, there's probably better indicators out there for you. But if you trade options and you like the idea of trading like a market maker and looking for some income on a regular basis, especially in an index where it's built to be efficient, this is a great indicator to consider. So that's why I built it. So you're saying you built this indicator around the expected move. Well, yes, but my expected move also I reference Thinkorswim and Tasty, and I'll take the two. I'll take the higher of the two. Because if I want to essentially sell a top or sell a bottom, I want the highest number, so I'm out of the way. So that's why I'm always referencing. I ask everyone in the morning, what's my Thinkorswim? What's my Tasty? I take the higher of the two. Some days Thinkorswim is higher than Tasty, and today obviously Tasty is higher than Thinkorswim, right? So I'm going to go higher of the two and let the market gap up. My expected move box will be gap adjusted, and we'll see if that's going to be a pretty safe way to trade the day. Okay. All right. Good. Okay, so here's the deal. If you want the indicator, expected move box indicator, I'm gonna put this in Zoom for everybody. Chris Pulver. So if you're on YouTube watching this, write this down. Chris Pulver Pub at gmail.com. If you're in the Zoom chat with me, Chris Pulver Pub at gmail.com. Send me an email. Ask for the expected move box. It's $20. Cool. All right. How often do you do the 10 wide instead of the 5 wide? It's kind of a discretionary thing, Arthur. I mean, I kind of look at it like, what do I think the probability of profit is? For example, I'm trying to think what we did this week. When did we do bear call? Did we do bear call spreads here? I think on this was Thursday. This is Wednesday. This was Tuesday. So I think on Tuesday we did bear call spreads, and I went 10 or 15 wide on those because I was looking at I pulled in $1.95 credit, and I think I was 10 wide on each one. So it's kind of a discretion thing. Like if I'm looking for a safe, what I think is highly probable, I don't mind going 10 wide, 15 wide for a safe trade. But in a typical kind of daily profit play, I don't mind looking at 5 wide or 10 wide just to see, can I get the credit that I want? I like the mix of, if I'm going to go 5 wide, I want to try to get $1, right? I want to try to get $1. So $1 credit, I'm risking 4, but the probability of profit is pretty darn high. And if I go 10 wide or 15 wide, I'm bringing on more risk, but I can pull in more credit up front. It's hard to get on a 10 wide, it's hard to get $2. On a 15 wide, it's hard to get $3. So it really just depends. The wider I go, I've got to be pretty confident that this trade is going to be safe. I still play some defense. But yesterday, for example, we pretty much played defense both on the top and the bottom, and not a single trade filled yesterday. The market for the day, I think it only moved 30 points yesterday, 30 to 40 points. So from the open, let me get the exact open price here. Open price, and I'm on a 1-minute chart so we can see the box print at 9:31. The opening bell price was right here. All right, so around 67.25. So that's our opening price. And the market moved about 54 points. Now, expected move yesterday was right here, 60.52. So did it move 60.52? No. The actual move was only 53 points. So it was an efficient day. Today, the market is looking at possibly a 74-point move. VIX is high again in the 20s. We had a flare up here towards 28. Markets up this morning with futures 0.46. We're going to open another 0.4 to 0.5% higher. These gaps all over the place, it just throws a wrench in the daily trading, but that's why I have gap adjusted math, because that way we stay on kind of the safe side of where I think prices go. Now, looking at gamma this morning, if we're going to gap higher, we are in negative gamma. As long as the price stays below 67.50, we're below negative. We're going to be in negative gamma. Couple levels I think are pretty obvious to see. You have the lows right here around 66.36 from Monday, You have the gap right here that could be filled. You have the positive and negative gamma at 67.50. The market could be gapping up that point 0.4, almost 0.5%. We'll see what that number looks like. But if the market comes up to fill this gap, I wonder if it fades, right? Because if this is my bigger gamma levels, are we coming back down to this for the day? I don't know. I mean, we had decent news today. GDP was positive. PCE was a little bit lower than expected, but oil is up to $94 a barrel. So I think there's going to be some interesting jawboning when it comes to oil at $100 again if we get it, and maybe higher. I'm sure what I'm curious what the prediction markets show as far as where oil prices will be. Will oil prices be $100 plus dollars, $150, $200? I don't know. But anyway, we're going to gap up a little bit today. And by the way, all of these gamma levels can absolutely shift in real time. Like real time 0DT is very, very price sensitive. So when the market opens today, let's say 0.5% higher, these might disappear in 10 to 50 minutes, which is why I also use my real time gamma, which is dynamic trend. And I'll plot the pre market here. Thanks, Chuck. Appreciate that, man. Chuck said, video you made on the expected move box was excellent. Explain how it actually works. Thanks. I just don't have it on my trading view. No worries. You have it on Thinkorswim though, yeah? I did. I think it was for you. You asked me about the dark theme. I think I gave you the indicator for dark theme. All right, Arthur, you get on that question. Thinkorswim. Yep. So I've got a grid share link. So if you want it for Thinkorswim or want it for TradingView, just send me an email, chrispulverpub@gmail.com. Okay. All right. So here is some real-time gamma. Let's go to pre-market. Again, like interesting couple levels. So gap higher here. This will all change once we have opening bell in a few minutes. Pre-market, even if the market is gapping up, if the market's gapping up, I'm probably looking to fade something around this pivot. If we get to like 67.75 or we get to 6,800, I'm probably going to look to fade this thing going into either today or Monday. But to fade that, I want to have like a low risk, high reward type trade. Okay. But pre-market, back to 67 it seems pretty doable. 67.50 is my positive or negative gamma, right? So if we're above 67.50, that would get us into positive gamma. If we're below that, we would fade back down. But pre-market, 6,700 and 66.50 seem like the big magnet levels. But again, in real time, this can change very quickly. 0DTE is extremely price sensitive. And that's fine. Like if you've traded, thousands of 0DTs like I have since 2022, when this became a really popular thing, you kind of learn how to read this stuff and just kind of go where the big magnets are. Right now, the big magnet is, since we're gapping higher, 6,700 and possibly this gap fill. But once we hit like 67.50 or 67.70, I'm probably going to look to try to fade that move into the later part of the day. Okay. Let's see here. Moses saying S&P last night, phenomenal. Curious on the trade. I do. I mean, it's still in a range. It's still in a big range, right? Qs are still in a big range. So here's S&P. Here are the Qs. I mean, look. I think both of these, the S&P and the Nasdaq, for this, the SPY hasn't hit the 200-day moving average. The Nasdaq hasn't hit the 200-day moving average. I mean, I think these even with the gap up today, it's like this is probably going to find it sooner than later, find that 200-day moving average. And if we do, then we see what the market's made of, because this level right here, change the color, this level at the 200-day moving average is also going to be matching some pretty key support. Excuse me. Some pretty key support that we had last year on October 10th and November 20th. Those were two massive intraday sell-off days. And if we bounce there and we see the market can hold, then there's a range. And the NASDAQ essentially is going nowhere, right? What's the vulnerability? I just talked about this in a morning session today. If we break below the 200-day moving average with some conviction, with some momentum and follow through, there is not much stopping this market from coming back to this previous all-time high. You can look at this from a measured standpoint. You essentially take this measured move. So measure this move here. If it breaks that low, measure that move here, right? So it could be a faster drop from 590 to 540, which would feel pretty terrible. But I still think that this level offers a chance to have a nice bounce. That would be probably a 10 to 15% correction in the Nasdaq. That's about a 12% correction in the S&P. Here are the all-time highs we had back in October. We did not hit all-time highs in January. So all-time highs here in October, if we pull back to that level, that's a 15% correction in the Nasdaq. I mean, I think that's pretty healthy. It doesn't feel good. It never feels good to see a 10, 15% correction, but I think it's also healthy to kind of get out of some of the bullish, just the bullish obsession and the bullish complacency to then, okay, rattle those bulls. And then we see if institutions are willing to step in and kind of buy that discount. Obviously, there's bigger concerns out there, right? I think this is a buy the dip for the year. I'm pretty bullish thinking that the market would do like look, I think the Trump administration is going to do anything they can to look, if we have oil prices at $100 and we have the stock market down 15 to 20%, there is no effing way that the midterms are going to be won by the Republicans. There's no way. So they know that. And I'm really surprised that all the stuff is going on in Iran right now. It seems like to do this now is baffling to me. I do think that there's some, weird power play. I think there's something behind the scenes that either this is a massive misdirection, this is a terrible plan, or there's a reason for it. But I think their reason is we can do this, get in, get out, and just have this be like a blip on the radar, and then put our put our priorities back in line for whatever, getting the money, getting the market back to all time highs, getting AI narrative back into optimism. But I think they underestimate how convoluted and how complex the Middle East is. Nobody has been able to conquer the Middle East ever. Like, we're talking centuries of this crap. I mean, George W. Bush did it. I know the guy had 2 terms, but I think I don't know. I don't get like what the power play is right now, especially the timing, because I feel like Trump and company are on the clock, and they can't let this thing linger till this can't linger into the summer. This has to be like done, I'd say by mid-April, end of April, because if it's not, this market's going to be looking at other things. It's going to start looking at, well, if we got this conflict, we got oil prices high, we got sticky inflation. Now let's take a look at earnings. And if we have a multiple earnings compression, there's another reason for the market to drop. So we could like snowball into all these stacked reasons of what climbed the wall of worry could be all of a sudden the things that starts to break it down because we're just not getting over the hump, right? So we'll see. Let's see here. Yeah, again, like I'm not here to get political. It's just like I don't know what the purpose is, right? I don't know what the purpose is. All right, market's opening. Let's get at it. We're gonna get a 1 minute close, 74 points. We gapped up to around 70. Let me check my levels for this morning. SPX. Decent deltas around 75 to 80. I'm gonna go 80 by 90. It's not too bad. 68. Let me see if I can get a fancy little trade running here. So let's go 65, 75, 85 here. That's not going to do it. 5 cents credit for a profit trap. No, I'm just going to do some bear call spreads. So 80 by 90. Couple of bear call spreads here for all right, 100% ATR is 67.82. Move these up a strike. Okay, see if I can get a dollar. I'm doing bear call spreads to start. I'm just going to do a couple bear call spreads to start. $1.20, $1.15. See if I can get a $1.20. So I'm doing a bear call spread. This is 67.85 by 67.95. That's a bear call spread. And then 68.05, 68.15. I'm going to space it out a little bit. See if I can grab $1.10 this morning. Don't fade too quickly on me. Oh, come on. I think we're going to push a little bit higher. So put that at $1. Let's go $1.15. And then I'll do a similar order. And this one, I'm going to try to go after a 1-to-1, which, again, might be difficult to fill, but I'm going to throw it in there. So I'm looking for a dollar and change. Let's see if I can get maybe a dollar, $5.10. Let's try $1.10. So bear call spread 67.85 by 95. That's 10 wide, and then 68.05 by 15, 10 wide. Trying to get $1.10. If we push a little bit higher, that should have no problem getting filled. Come on. Give me $1.05. Don't fade too fast on me. All right, let's have a look and see where price is at. So there's my expected box. 67.77 is the high, and 65.98 is the low. You want to write that down? You get the expected move box. 67.77 is the gap adjusted high, and 65.98 is the low. Okay, let's take a look at some real time gamma. So interesting. So let me see if that gamma reading on Tanuki trade is. So this is 67.50. So if the market comes up into this transition area, we should see that thing fill for some more credit. Give me $1.10, would you? I want more than this, by the way. I'd like $1.25, $1.50 of this trade, but I'm gonna start with $1. See if I can get $1. Come on. Just because I think it's a pretty high probability we can make $1 on this trade. So can I get $1.05? I'm just gonna leave it. $1.10 pending. Let's go. All right. Let me replace this one. I'm gonna go $1.25. Pending. Let me check some other levels here. Let's just go to more mechanical daily profit play. So I could do 75 by 80. That's a 12 delta. And let's match that delta here. 75 by 80. I've got the low on my expected move around 65.98. Let's see. So 6,600 measurement. Technically, it's 65.98. Let me go a little bit wider here. All right, so I'll keep this one. Let me post this in Telegram. I'm going to get a couple trades running for the day. Yep, hang on a second. So I don't have anything filled yet. Let me look at more mechanical daily profit play. If I go 80 by 90, this is a 10 delta. And then 10 delta 25. My expected move lows are on 66. Let me see if I can still pull $1 out of this. 5. Okay, so this is 10 wide for $1.10. I'm going to take this trade, see if we can get $1 or something. $1.10, $1.05. Let's try $1.10. Come on. All right, give me $1.05. All right, so here's the trade that I'm in. Officially posting daily profit right now. So this is a 3/13 expiration. 68.05. 67. That's not right. Sorry. Filled. So 67.80 by 90 and 65.95. 65.85. I got filled for $1.05 credit. If you want to look for more credit, if you want to look for like $1.25, $1.50, let it pend. I'm going to take it in for $1.05 and then just let this marinate. So now I'm going to look at a little bit of defense around the 6,800 handle. And then I would look at a trap down here, just a little bit lower than my strike. So probably still talking some defense this morning. So posted in Telegram. Okay, we're getting a little push to the upside now. So that 68.05, let me make sure this is not going to overlap here. So I've got 80 by 90. And okay, so these don't overlap. 85 by 95. All right, I'm going to keep this one running. This one might have a chance to get filled for a couple of dollars. I'm going to keep an eye on this one. Let's go for like $1.50. If we get a decent direction, this should open up maybe to like $1.50. So I'm going to put this. This is two bear call spreads: 67.85 by 95 and 68.05 by 15. Looking at two bear call spreads, pretty low deltas. These are trading for like 7 deltas right now. So 7 delta, I mean, there's a 92% chance of profit on that trade. We're outside the expected move. Plus or minus is retreated to 45 points now. I mean, I'd like to throw it in for another dollar, but I'm going to see if I can get another. If price goes up, right? If price is pushing higher, we have a 67.40. We got a gap fill area around 67.50 to 75. So I'm going to see if this will fill up a little bit higher for my credit. And then I'll sprinkle in some defense. So if I were to do a 75 by 6,800, that's 25 wide. And then 30. See if I can get this debit to be pretty low. That gives me a $2,500 profit trap this morning. But I need to pull in a couple extra dollars of profit. So I've got $1.05 running. I could pull maybe $1.10, $1.15 out of those two bear call spreads. And then I put some defense up near these tops. That's a little pricey though. So that's a broken wing structure. If I were to, let's see, I'm just trying to figure out how I can structure this without overlapping. So I could buy the 90. That's 20 wide. This one's not terrible. That's going to cost me a little bit of a debit to take that trade. All right, let me hang out and see if I get filled in these bear call spreads, and I'll be a little bit more firm on my defense. Okay, so let me put in some more pending orders. I'm adding 2 low delta bear call spreads. 313 expiration. 67.85. 67.95. 68.05. 68.15. $1.25 to $1.50 credit. Pending. Okay, I got it in for $1.50. I'm trying to get $1.50 out of that. That'd give me $2 and they give me $2.55 on the day. And then I can start playing around with a little bit of debit defense. I can get a debit in for, maybe 25 to 50 cents and have a structure that gives me maybe a profit trap of a couple $1,000s. Okay, so I'll let that just hang out for the morning. All right, nice. $1.20 on the DPP. Okay, good. I'm still looking at so I've got the daily profit rate running for $1.05. Nice fill on that $1.20. That's a good fill. And then I've got some bear call spreads pending that I'll just hang out with. Filled at $1.05, good. Filled at $1.20, excellent. Excellent. Yep. Everybody asked me this. Do you need defense? You don't need defense. If you take the trade and it's defined risk, you don't need to play defense. The reason I use defense is because I'm typically taking more than just the standard daily profit play. Usually, I've got a couple extra trades sprinkled in, and so having some defense where let's say I pull in $3 of credit for the day. Well, if I'm risking, let's say $1,500 to $2,000 for that $3, I'd like to play some defense, and maybe I can sacrifice, $50 or $100, and then I can win $200 for the day, but have defense there if I need it that offsets pretty much my entire risk, right? So, I mean, when I play defense, I'm never trying to lose what I'm pulling in for the day, right? All right, now that those two bear call spreads are up to about $1.15, $1.20, price is pushing a little bit higher. I'm going to see if this will rally a little bit more. So if we rally a bit more, I'm going to keep an eye on this one. If it gets up to like $1.30, $1.40, I've got it pending at $1.50. See if we get there today. Okay, nice. Bill got $1.25 for that 10 wide. Good. Good. Let's see. This debit for 55 cents. I mean, it looks pretty good. See if I can get this down to like $1.25. I'm probably going to take on some heat, but let me see if I can get $1.25 credit. I got filled for $1. You would fill me $1. It's already up to shit. It's up to like $1.30 right now. Take $1.30, $1.35 if you want to get in the trade. I'm just going to update this. I got filled at $1.25. I'm taking on immediate risk. So, all right, I got a couple levels in. Now I'm going to sprinkle in defense. So, price is pushing a little bit higher. Okay, fine. Now, if I buy, sell, and buy, if I buy, sell, that's $2,500. Create the 30 wide structure. That's a broken wing. Where is this structure that I want? Let me see. Buy the 75. So $1,500. It's got to be there. And then 30 wide. So that's 25 wide by 30 wide. So I pulled in $2.30 of credit. I want there to be a much cheaper debit here. Let me see. This is reasonably out of the money. Let's keep an eye on this defense for a second. I probably don't need 68. Let's go 20. So if my positions are threatened here, since I sold the 80, maybe go 20 wide for a debit or a butterfly here. So a little bit of defense there. That's 25 and $25 and change. So maybe this defense will be, if this gets under $1, I might take the trade here. I haven't put in any defense yet. Not yet. Did you get filled for $1.50? Good. Good fill. Yep. And it's probably still going. So right now it's up to about $1.60, $1.65. So $1.50 is a great fill on that trade. All right. So I'm editing. This is now filled. Filled at 125 to 150. All right. So we got a couple trades in. Now I'm looking at some defense. So 75. That's 25 wide. I mean, it's probably cheaper for this trade. That's 20 wide. And then go 20 to 25. This one's not terrible. I have a little bit of exposure at the 80 and 85 handle, but I have up to like a $2,000 profit trap in here between 90 $67.90, $68.10. I've got a nice little profit trap at 2,000 bucks. Let me see if I can take that trade for. So I pulled in 230 on the day. Pulled in 230 on the day. This debit would cost me, 65 to 70 cents. I can sacrifice a little bit of that. I'd like it to be cheaper. I'd like it to be a lot cheaper, but honestly, to get some defense in, I feel a lot better because I will be leaving before closing bell today. So let me hang out and see how this all works out. 65 cents, 60 cents. Cheaper debit would be great. All right, none of these. So there's going to be one overlapping strike here. If I take this trade, I'd be buying another contract at the 67.90. This gives me a $2,000 profit trap. And I'm going to try to get this thing filled for like 65 cents or less. 65 not filling. So 230. I mean, I still make a $1.60 on the day if I'm throwing this one away. If it doesn't pay me a profit trap, I'm throwing it away. But let's see if we can get this down to like 65 cents or cheaper. 50 cents would be great. I'm going to let this marinate at 65 cents. Echoing, it shouldn't be echoing. I mean, I would have seen that in the chat. How's the? I just got filled at 65 cents. Okay, so I got a defense trade in. This is a top defense trade. And you might actually be able to get it cheaper. SPX 313 expiration. It's a broken wing structure. I'm buying the 67.90 call, selling the 68.10 call, and then buying the 68.35 call. So I paid for that debit. I paid 65 cents debit. Okay. But I'm paying for defense, but my total credit is $2.30 from DPP and bear call spreads. Minus 65 puts me at potential. So for it, 230 puts me at 165 for the day. So 1.65 with a $20 profit trap from 6790 to 6810. All right. So a little bit defense. The probability of profit today should be that I win the day with about a $1.60, $1.65 when it's all said and done. It's probably the net result for the day. Now that the defense trade is now shown for 50 cents. I mean, take it cheaper if you can. Net, here's my fill. $1.05, $1.25, 65. So I'm in for a $1.05 credit, in for a $1.25 credit, taking a debit away from that. So my net's about $1.65. Okay, here's our expected move box. Again, hasn't adjusted. It's gap adjusted from the open. Let's see what the day gives us. Okay, now for the downside move, we have those previous lows of the week around 66.30. Is that right? 66.07 was the open. No, sorry. Low for the week. Sorry, 66.36 was my low for the week. If some reason Friday the 13th, the market wants to come, ripping back down there, I'd like to have some type of profit trap, maybe down around like the 6,600 handle. This should be really, really cheap to play. Let's see. So that's my double up trade. This is my daily profit play. So I can sprinkle in something really, really cheap. Maybe around that 60. Let's see how cheap I can make this. So if I sell the 66, let's go at 30 wide. What's this cost me? 70 cents for a 30 wide. 45 cents. I mean, that's pretty cheap defense, right? You get up to 2,400 bucks. That's 25 wide for, maybe 30 to 40 cents. 20 wide also isn't terrible. It's 30 cents, but it's like you want to make an extra $500, make an extra $500, potentially pay, 10 cents more. So what I'm going to do instead of I'm going to try to get this in for a debit or a credit spread. So let's go 20 by 66 and then go 30 wide. Okay, so right here, this is 6620 by 6600 by 6570. That is a broken wing structure. I could go this, trying to pull in some type of credit. Trying to think here. 25 and then go 30. This is also like inexpensive. I'm going to try to get this one for any type of credit. If this fills me at any credit, I will take this as a broken wing defense. But the price is going to have to fall today for that to happen. So this pending order is 50 cents credit. If this trade shows like 5-cent debit, 10-cent debit, I might just take it. If it shows any credit, 10 cents, 15 cents, I'll certainly take the credit. I know there's risk, but my risk would be we'd have to fall all the way to 65.70, which I don't think we're going to do today. Okay. So what I'm looking to defend is I'm looking to try to defend right around that like expected move low. If it even comes down to do it, we might not see anything happen today. VIX is down a little bit. I've got a chart alarm set. Let me see if I can set this below 2370 VIX. Maybe set it below here, 2217 VIX. Just kind of keep tabs to see like is the VIX going higher or lower on the day. 50 cents on the butterfly. Is that the call side there, Chuck? Okay, that's pretty good. I'm going to go pending order on that put side. Okay. So really, for me today, 80 is my line in the sand. I'd like to see price stay below 67.80. 67.80. Okay, so let's change this to green. And then 6,600. Technically 65.95. Right in here. So the green lines I have in my chart, this is where I'd like to see price stay below today. VIX box is centered. By the way, I changed it to 66.72. So we centered this. VIX at, high of the morning. Let's go like 9:30 VIX is around, what's that open? 25.48. So 1.6%. That's a 1.17, 1.6. That's going to be hard to get to. We'd have like a 6,800, maybe a 68, 6805, 6810. And again, that's like a big thrust. If we're getting to 6805, 6810, I'm most likely going to take a bear call spread to short the crap out of that. And whether it's a 0 DT or I spread it out to Monday, I'm going to take my chances of maybe shorting this into next week. All right, so we'll just hang out. I need price to stay below this green line, above this green line. Net on the day, I've got some defense up here. I've got pending defense down here. All in all, I'm looking at about $1.65 per contract as far as profit. If price just kind of stays where the, again, expected is greater than the actual, we should win the day. Because I'm out of the office before closing bell today. If I've got some profit, I'm most likely going to take the profit. Okay. Yep. So the put defense trade is pending for right now. I'll put it in daily profit play. So I'm doing like a 25 wide on this one. Yep. So this is going to be the bottom. Defense trade. 66.25. 6,600. And 65.70. So I'm looking for 50 cents credit pending. This is a $25 profit trap. Broken wing. If this shows, let's say, 10 cents debit or lower, or any credit, I'll adjust and take this for a low-cost defense trade. Okay. So if price falls, let's just say price for some reason falls aggressively. Again, this is hypothetical here. But if price were to fall aggressively, that trade may start showing a little bit of credit. I might just take it for 10 cents credit, 15 cents credit, and just let it be it's not free. It's not a free defense trade. It doesn't cost me anything to put on the trade because I get credit, but I'd still be risking about $1,000 if prices below 65.75, which would have to clear our lows. We had a 66.36 low. We'd have to clear that low by, 60 points essentially. Which I think that's a little tough for the market to do. Not necessarily, Ellen. Top just means I'm defending the top of my trade. So you're asking. So it's not always like puts at the bottom and calls on top. What it means is when I put top defense, it doesn't matter how I structure it. I'm just saying I'm defending the top of my trade. So example would be this: if I am this green line, right? When I put in a top defense, what that means is I'm defending the trades that I want to see price stay below that green line. So I'm putting in defense trades at the top. I want to see price stay above this green line down here, and I'm putting in trades that are going to defend that. So if this is threatened at all, if this is threatened or this is threatened, I'm going to defend those trades. So my top defense is structured up here to defend this top, and then my bottom defense is designed to structure defense at the bottom. Make sense? All right, cool. Okay. Very good. Now let's see what the rest of the day gives us. So that is in. Now we had a little thrust up. I'm going to check on something here. Let's go out to the 20th next week, which is triple witching. Let's see what the 20th to 23rd looks like. 20th expiration or the 23rd. Let's start with the 23rd. Let me go up in deltas here. Let's see here. 15 delta. 69. Let's go like 69, 15 by 30. Let's see if this. So I'm going to do I'm going to look at a call condor here. 69.15. That's a 20 wide trap. And then maybe the 50 by 80. That credit is not that great. Maybe going. That's a little bit better. That's still a lot of risk, though. So I get a profit trap here. Max risk could be, that's a little high. I've got a $2,000 profit trap. I need to cover up to $3,000 for a hedge, which I could probably do that. Let me see what this would cost me. So that's 50 wide and a 20 wide. That's comparable. Let me maybe tighten this up. So going 15 wide profit trap. And that's a decent income trade. 1,500. 10 delta would be our threat. All right. Before I take this trade, I'm going to write this down. This is 69.15 by 69.30, 69.50, and 69.90. Let me see if I just did a call spread to hedge. Maybe the 45. Let me see what this looks like. So if I did the 45 by 69.45. So that cost me $6 to hedge. No way. I'm better off putting on like a put spread. If I did a 7,000 50 wide, Huh. That's more expensive than I want it to be. All right. I thought I was looking at a pretty decent structure. It's a call condor, but maybe I just need to trim. Maybe I'll start at the 10 delta. So if I start 50, 50 to 70, that's 20 wide. 75, that's 25 wide. I can't believe that I'm going wider on the credit side and it's still going to cost me a debit to do it. So I don't want to take that trade. Yeah, that's not really worth it. The hedge just has to be really cheap. I'm just not pulling enough credit up front. Anyway, I'll put a pin in that for right now. Daily profit lower defense to give me 45 cents credit to take it. What? Is it? Double check that, Curtis. Mine's showing a 60-cent debit right now. So I'm putting in, look, right now my defense at the bottom is showing about 45 to 50 cents debit. I want this to be like maybe, I don't know. If I can get a credit for it, I'll take the credit. I don't think you're going to get it filled for a credit right now. So right now it's showing as a debit. It's showing as a debit. I don't want to take it for a debit initially. I want to see, like, if markets fall enough, it should actually offer maybe 10, 20 cents credit if they fall. Okay. So we'll keep an eye on that. All right, I'm gonna say no to that call condor for a second. Let me go back to today. So, I'm pretty confident that we're not going to have prices in the 68s. So let me flip this around. It's really the low that I'm kind of watching closely. Could I go? Let's see, 65.50 to 68.50, and then 40. Yeah, I mean that's not a good trade. 55, maybe a little bit closer strikes. Nope. So that's kind of the play I took yesterday. Is I'm just trying to get myself a range where, can I grab? I don't want this trade for like $10. I want the trade for like $100, $150. I'm risking 850 to make 150. My high would be 68.35. So let me see. Maybe I can say the high is going to be around 30, something like that. But I'm still only making $40 on that trade. I want like 100, man. 60, 65, 70. These just offer like no premium. Closer, but not great. That's 15 wide. 15 wide. Not a good trade. $75 to give me. Yeah, never mind. All right, fudge it. So here's my day. On the call side, one thing that I keep looking at, this is what I spot check almost every single day, is just kind of watching what the plus minus is. This is what the broker is showing for the expected move for the rest of the day. So again, at a glance, this is where I have my call strikes. This is where I have my put strikes. I mean, so far, if everything stays according to plan with the expected move, right in here, if price stays below this, stays above this, I have a winning trade, right? There's no guarantees. This is just reflecting, actual price. So this could change very quickly. We could have higher volatility. We could have prices moving and go directional. I do have some defense on top. I have a pending order to defend the bottom, and this is what I'm trying to defend. Trying to defend the bottom there at 65.95. Do I think price is coming down to that level today? Not necessarily. It's probably going to stay range bound. Okay. All right. Let me get a couple questions here. So right now, as long as price is going to stay between this green line at 65.95 and this green line at 67.80, we should be in pretty good shape for the day. I'll set a chart alarm up here at 80. And I'll set a chart alarm down here at 65.95. And that's what I'm going to monitor for the day. Next up, I've got some questions. Somebody's asking on Lyft. So Moses asking on Lyft. Why can I not spell? There we go. So Lyft. So I bought Lyft last year and exited, which you can see was pretty good timing. So we bought it around $11. So I bought it around 11. We had a couple things. We did a call combination where I just bought calls. I did a buy right, sold some covered calls around $20, got out of the trade. So dumped the shares around $20. That's not a bad run, like 11 to 20, almost 100% gain on that. And then now it's back down here. I would say if you like Lyft, one thing I want to make sure they're doing is bringing in autonomous vehicles, or at least they're in the conversation with autonomous vehicles. I think that's a good thing for them profit margin wise, and a good thing for their future. Their stock price is actually garbage compared to Uber, but Uber is like the household name, and Uber is also declining. I do have a ratio spread on Uber all the way down here. We'd have to have Uber down like 50+%. So if Uber dropped like 53%, I would take some ownership, but I'm happy to do that. Let me get a couple of fundamentals here. So Uber, Snowflake looks pretty good. Earnings are forecasted to grow. Price of earnings is probably still pretty high. Actually, not really. 15 times earnings. That's not bad. Cash flow, discounted cash flow model 172. I like upside targets of Uber, but I'm not wanting to buy it right now. So I'm looking to do ratio spreads. And if I get a sign, give me a sign at a much cheaper price. If fair value is 170 and I own it at $45, I'd hang on to it for a repair. Okay. So, Uber, I've got some exposure here. Lyft would be if I'm going to sell some puts on Lyft, make sure fundamentally it has an upside target. So Lyft, Snowflake again looks okay, trading way below estimated value. This is what's not a good sign, though. Earnings are forecast to decline by an average of 56.6%. That's not great. Price to earnings, 2 times earnings. Fair value, $47. We're trading at 13. It seems like a bargain, but I don't know. Snapchat has been garbage for years for me. JetBlue is one of the shittiest priced airlines that I've had in a couple of years. I have some dogs in my portfolio that I haven't let go of, but they're not going out of business, and you never know if they're going to show up and pop one day. So Uber is ratio spread, a little bit more expensive. Lyft is, lows down here at $8. I guess my question is on Lyft, how far out could I go and say that there's a chance to make some money on Lyft? So it's not terribly expensive. If I went out to the end of the year and sold some $8 puts, this is the problem. Do I sell the $8 put and make 3 cents? No, I don't want to do that. If I were to do the 10 by 13 ratio spread, okay, that's a good trade that put my break even down to about $7, but I'm only getting 12 cents to take that trade. So this puts me down. This is a better trade. This puts me down to a break even of, let's go 13 minus 2 minus 1. I'd own the shares at $9.95. I want the break even to be around $8 because that's the low. So I don't know if there's a way I can structure the trade right now to get that unless I go out further in time. So further in time, December 2026, January 2027. Do I think that, is Lyft something we go into 2028? That seems like a big risk to me. But if I were to go 10 by 13, okay. So here's what I could say on Lyft. This is a time trade. I'm out to 2028, which nobody knows what's going to happen in 2028 or by that time. But if I do the 13 by 10, it's $1.40 income, okay, which I don't mind. I would get a profit trap, potentially $300. So my ownership is, if we're below $10, I get a $3 bonus on the profit trap minus the $1.40 on the credit. I'd actually own shares of Lyft at $5.60. Do I think that's a good enough trade to justify it? I think I could own it at $5 and maybe get it back to 10, 15, or 20. And if it never gets assigned, then I just grab $150. Now, $150 is not that exciting, but my max loss would only be $558. So as far as return on risk, if I get $1.40 out of a max loss of $558, okay, I'm getting, that's not right. So 140 out of 558. I'm getting about a 25% return on my buying power. Like that to me is a pretty good trade. So do I like it enough to take it going out to 2028? I mean, 2 years from now, do we think we're gonna have autonomous vehicles? What's the ride share market gonna look like? I mean, Uber and Lyft are like the two in the game. I mean, are they big enough to go out? Are they going to get bought? I mean, one thing that could happen is they get bought out by Uber. Maybe there's a merger. I don't know. I mean, there's always risk, but it wouldn't be the end of the world if I'm down. Max loss of $500. It's not going to kill me. But yeah, let's see if I can get it. $1.45. Let's see if we can get the trade filled. If it doesn't fill for like $1.30, then I probably won't take the trade. So I'll try it. $1.45 pending order credit. Not filled. All right, I'm going to go down by a couple of cents here. So mid price is $1.44. Let's do $1.43. Not filling. $1.42. So 13 by 10. Try for $1.42. $1.41. I think $1.30 is my cutoff here. So if I work this down in price, try to get filled at $1.30, I'll take it. If not, then I'll just pass. Bid ask is a little bit wider. $1.38 not filling. 37. 36. Okay, $1.30. Like I said, final offer is $1.30. Not there yet. Okay, I'm well below the mid price right now. Final offer $1.30. No fill. Cancel. That's it. Not going to work out on Lyft for right now. I'll pass. If we come down to these lows, let's say we come to, $8.50 or $9, even $10. Hell, if it comes to $10, I'll still look at it. I'll set a chart on there at $10. So if we get into the lows, I wouldn't mind just buying some shares. If I throw $1,000 at it and it goes up and doubles, like that's not a bad trade. But I just kind of like the idea, like a ratio spread that I could own the shares at like $5 and change. That's very, very cheap. And what I could see happening on the stock is we just spend, more time doing this. So that means if you can catch one of these lows, there's a pretty good opportunity to grab some profit, around that $20 to $22 handle. So that's my outlook as far as just that's more like a range trade. And there's a gap up here. That's why I put this yellow box around 29. If we started at $10 and we get to 30, that's a great trade, right? So anyway, we will see. All right, taking a look at Gamma this morning. Market is up, market is down. If you're in a standard daily profit play, you're probably loving this because you're right back into profit, right? Very, very neutral on the day. So market never touched the positive negative gamma pivot point. We are fading. We're looking to fill this gap a little bit. If we leak and go a little bit lower, one thing I do have running for today, it's kind of running out of time, obviously, but my double up trade for the 65.50 trap, that is running for today. Let's check and see. It's an SPX trade. All right, let me get these organized from today with the fills. So I did the $1.05. So that's an 80 call by 90 call. 80, oops. Oh, yeah, that's the overlap there. So 80 by 90 and 95 here. So this one, I'll put DPP and the 60. Okay, so I have to recognize that I'm overlapping the 6790 because that 6790 is a part of my defense. So the 6790 by 6810, 6890 by 6810 Uh, 67.90, 68.10, 68.35. This is going to be top defense. Okay, and then this one is going to be the bear call spread combo. All right. So as long as this, oops, not this one, this and this and this add up for net profit today. Like right now, you can see that we're in a bit of net profit. So my overlap is down 112, my combo is up 75, and my defense is up 80. So right now, net, I'm up around $40. Okay, about $40 per contract. Double up trade. This is the one. I mean, this is going to be a pretty aggressive fall today. But if we get it, we have a up to $5,000 profit trap hanging out between. I mean, we have to drop a lot though. We have to drop to 6,550, 6,500. That's going to be a very very tough trade today. But if it happens, that'd be freaking sweet. So double ups look like we might be taking a couple small losses. That 70. I mean, this one's out to next week. I don't think we're getting to 7,200. Part of me wonders. I mean, could we extend this out to next week or just put in a new trade? Let me see what next week looks like. Next week on Friday, the 20th, if I pin 6,500, I just don't want this to be expensive. Yeah, I mean, we paid $1.20 for that trade. I'm not going to take this thing for 220. I could tighten it up a little bit. I could go maybe 30 wide and 30 wide, like for 70 to 80 cents. Where's my 200-day moving average? So 6,600 is my 200-day moving average. 65.20 is the low from November 20th and 21st. Probably need to finesse this a little bit better. So let me see what the maybe 25 or 50. Let's try 30 wide here. So do I want to throw another dollar at it next week? Maybe. Let me build this trade out really quickly. So this is 30 wide for under $1. I don't mind extending this, so that way we'd still have a double up trade running. And I might see like maybe we get back to 7,000, maybe we drop to 65 and change. Let me build this out in option strat. So let's go butterfly. SPX out to the 20th. And this would be looking to pin around 65.50 and 30 wide. So pin at 65.50. And I'd buy the 30 wide. Buy the 30 wide. So that's the butterfly. All right. So how does this trade look going into next week? Let's say that we drop over the week as time passes into Monday, into Tuesday. I'm looking to see like what day does this actually offer some credit. So if it was down to 65, 65.50 or so, I'd have 100% gain. Okay, but it gets more exciting near expiration. Wednesday looking a little bit better by Wednesday. Thursday, Friday, Thursday closing bell. It's like, okay, so I turned $100 into maybe 270, 280. I guess it's all, yeah, that's just tough, man. It's all Friday. All the magic in that trade with like crazy amounts. Well, now to be fair, I mean, I could still make $200 to $300 if we're around like 66. So 6,600, 65.80, 65.50. There's like a 4-to-1, 5-to-1 trade there by Friday. I guess it's all timing there, huh? I don't know. I mean, it's a bit of a throwaway trade. It's pretty cheap. If I could get this for like 75 cents, I'll take another stab at it. Let's see if we can get like under $1. See if I can take this trade for another dollar. Let's try 80 cents. Not feeling it's probably going to be over $1. I'm going to try to take it for less than $1 today. I'm seeing a lot of fluctuations between about 85 cents and $1.15. I'll put it at 90. If it doesn't fill, I'm probably just going to pass. All right, I'm going to pass. All right. Dave, what? Dave, you got to tell me what your defense trade was at the bottom. I don't know how you got filled there, dude. Will you double check that, make sure it's a credit? Because I can see you getting filled for 60 cents debit. Not 60 cents credit, though. Because right now my trade is showing 75 to 80 cents debit. So make sure that filled for I don't think he got filled for a credit, to be honest. It's still defense. It's still a $2,000 profit trap, but you probably paid for that trade. Double check that. Bill says got into last week's call fly double up for 15 cents debit. That's awesome. Yeah, that's super cheap, man. All right. Yeah, Dave, double check that, man. I don't think that was a 60 cents credit. Mine's showing 75 cents now debit. Debit, not credit. So it's showing 75 cents debit for that defense trade. So this is my pending order for defense. Still showing as a debit. If this gets down to, I'm up like $165 on the day. That's going to be like my gain per contract. If I took this trade for less than 25 cents, I'd still take the win. Grab $130, $140, have a profit trap above and below. Profit traps are worth $2,000. I'd be okay. But I want this to be either one, a very, very cheap debit, or obviously if price was going to fall aggressively enough, then it would be maybe a 10, 20 cent credit. I'd love $1 credit. I just don't think we're going to get $1 credit for a 20 wide trap. So let me try something else. If I did a 15 wide by 20, I could take that one for 10 to 15 cents. Like, that's a pretty good defense trade, right? My break even would be 66.85. That covers, that covers in full. That covers my 10 wide daily profit play. So that's a 10 to 15 cent debit for basically free defense. If you want to take it for free, now you can take it for maybe a 5 cent credit. Let me see what this looks like. So this is 15 wide. If I could take this for 5 cents, I essentially have a $1,500 profit trap at the lows. Right? Like, again, now another way, let me see if this overlaps. I might just take both. One's pending, one gets filled. That's a $1,500 profit trap. That put my break even around 65.75. I can take this for maybe a 5 cent debit. Let's try it. 5 cent debit. See if this will get filled. Let me make sure there's no overlaps here first. So no overlaps. No overlaps. No overlaps. Yep. So let me see if I can get 5 cents credit. I just saw it pop up there on the screen. Let's go 5 cents credit. All right, so 5 cents credit not filling. Let's try a 5 cent debit. And this gives me a $1,500 profit trap. Okay, so I've got a 5 cent debit filled on defense. That way I at least have something to defend my low. I have something to defend my top. If nothing happens, I'm still up $1.60 per contract on the day. Okay, Dave says I got 60 cents credit, put the legs in the wrong way. Okay. So what do you need price to do then, Dave? Like, what's the trade that you put in? Give me the legs and let's build out your trade and see what you actually put in. Because if you did a broken wing structure, give me the legs and let's put in what you bought, what you sold, and let's see what the trade actually is then. Or did you close it out already because it was the incorrect trade? Don't be shy. All right. Curtis says, I've checked twice in the lower defense. My Charles Schwab showing 75 cents credit, but it would never fill. If you put in the defense trade, it should not be filling at any credit right now. If you put it in correctly, let me make sure I didn't type it in wrong. You buy the 25. Here's my defense. You buy the 25, you sell the 6,600, and then you buy the 6,570. That is 25 wide and 30 wide. So it's a broken wing structure for a pending 50 cents credit. That trade is literally showing like 60 to 70 cents debit right now. So it's not filled. Now I just put in, I kind of sprinkled in a, bottom defense 05 debit fill. So I don't mind overlapping the defense because I think they're high probability trades. But I did a 6605. So 05 and 6590. So 6605. 6590 and 6565. Is that right? Yes. '05 debit. This offers a $15 profit trap to defend the put spread of my DPP, and the break-even price. So no risk above. Break-even price would be got 15, so 65.75. So there's no risk above 65.75 on that defense. There is risk below that, but that'd be a pretty tough thing for the market to drop, 20 to 30 points lower than the expected move, especially with a gap higher. Okay. So I'll keep this defense pending. If this still offers any credit, I'll still take the trade because it's a up to $2,500 profit trap. This one, only a 5-cent debit. I'll throw 5 cents at it to make up to a $1,500 profit trap, and then the call side should be fine right now. Broker seems to be, or the market seems to be pretty chill today. Just a calm little Friday, I guess. Any money to bet on the pin at 6,700? I mean, it's not a bad trade, right? I mean, if we have a little to no movement today, I mean, an iron fly is always a good alternative. An iron fly is a great trade. I mean, again, I don't know. I mean, I never know when the market's going to close or where it's going to close, but I'm always interested in a couple of spots during the day. We have the expected high, we have the expected low. Actually, this is not right. Sorry. Let me get this expected move box. So we have the expected high, which rarely does price get there and stay there. The expected low, which rarely does price get there and stay there. So a lot of times it's usually somewhere in between. So if you look at about 75% of this box, that's generally where price is going to be. So a lot of traders, and I know people that do this, this is their full strategy. It's challenging because I like to win. And if I did like iron butterflies all day, every day, I might win like 45% of my trades, 50% of my trades. And that would bother me. It's like if every 10 trades I took, I'm losing 4 or 5 of them or 6 of them. It's like that would drive me crazy, even though the payoff could be very nice. But anyway, long story short is, do we hang out at 67? I mean, it's very possible. Look at my gamma levels today. If we're gonna cling to this magnet all day, I mean, if 6,700 is gonna have price testing it multiple times today, so we go, up a little bit, down a little bit, up a little bit, down a little bit. Does it close at 67? That's so difficult to know, but it seems like a pretty good chance. So, if it was trying to pin something around 67, if you were right now, we have the VIX at 25. If you went like probably 25 to 30 wide on those wings, I mean, to be safe, probably 30 wide, looking at something like this. So if you try to pin the 6,700 and then you go 67.35 and 66.65, I mean, if price stays in that range, then you can have a decent amount of profit. But I'm curious what the credit is because it's not guaranteed. Let's take a look. So if I want to pin something today around, let's say 67.05, we'll split the difference because we're trading at 10. We think 6700 is a good magnet. So I'll split this. 67.05. And the remaining expected move is about 40 points. So what's the broker going to give me? If I go 40 points higher, 40 points lower, basically you can get a, I don't know, 2.2 to 1, 2.3 to 1. So 27.35 over 12.65, you get about a 2.16 to 1. So that's if price stays. And here's your break even point. Because you're pulling in credit, your break even is 67.05. 67.05 plus 27, we'll say 27.10. Your break even is 67.32. So you might think like, well, I'm wrong on everything at prices all the way above 67.45, which is correct. You'd be losing the full amount if it's greater than 45, and you'd be losing the full amount if it's less than 66.65. But your break even price on this trade for you to make money is 67.32. So if you want to get paid on this trade, you need price to stay below 32. And then you take this 67.05 minus 27.10, I think is what we did. And you want price to stay above 66.77. So that really for the iron fly is you take on a little bit of risk here. Your risk is full. And then you have the ramp up in here. This is kind of your break even price. And then you have your full profit trap. A little bit past this is break even, and then your full risk is down here. So, I mean, 1265 is not a nothing burger for risk. You essentially get like a 2.2 reward to risk if you're inside of this at the perfect price around 67.05. That's like an excellent finish, but nobody knows that that's going to be the result today, right? So it's just a chance to throw a net out there and see if the net is going to stay within somewhere the expected move. And you have a, 2.2 to 1 setup, which day in, day out isn't bad. You don't have to win a lot of trades to make money doing this strategy, but you do need to see the market cooperate, right? You do need to see the market cooperate. So, I mean, I love these trades. But what does frustrate me personally is when I take a trade like this, I don't like to lose 5 out of 10 trades. There's a reason that I like to trade where we're winning 90% of my trades. I get the trade-off. I get my trade-off is, I might get 25% return on risk versus 220% return on risk. But I can also stay way out of the money and trade much higher probabilities than just, throwing it out there and saying like the market needs to move only 28 points. Because this is the one thing that I would say. The market's allowing us to get a 27-point move, and the broker says we could have up to 38 points. So already that trade is like, well, if the broker moves what it says it can move here for the plus minus, my trade's done. So you really need that 6,700 to be like a sticky price today. And maybe it is. I mean, it looks like it. It looks like price just wants to dance around 6,700 all day. That's fine. But when I take a trade like this, right? When I take a trade like this, it doesn't hurt to have some overlap, right? So let's do the math. If I did a trade right, I have a butterfly in here. So let's say I have on my main pin is like 6,700. So pin price in here. Okay. Well, if I did the same thing around the opening price or the previous day's close around 66.70, let's say I put in a profit trap in here. And then we come up to the intraday highs, maybe I put a profit trap here. Okay. Now, if this one offers like 3 to 1 or 3 to 1, this one offers about 2.2 to 1. I'd like this one to offer maybe 4 to 1. This one to offer maybe 4 to 1. This one to offer 2 to 1. The issue is these have to be cheap enough for me to have one of these trades pay me enough, right? If one trade doesn't pay me enough to cover the cost of all these, I don't really want to take the trade. So again, I'll just kind of walk through this hypothetically. Let's see if we can maybe find something interesting. Give me a second here. Okay. So 67 seems reasonable. So now I'm up. There's 40 wide. There's 40 wide. So this one I'm risking about $1,100 to make up the 2,400 bucks. It's not a bad trade. You know, it's not a bad trade. If we hang out at 20, if we hang out at 67 all day, it's not a bad trade. Now I'm gonna write that one down so I can go 6,700, and that would be the spread is the call side is 6,700 by 6,740, and the put side is 6,705 by 6,665. So that's an iron butterfly, and that is for about $29 credit. Okay, so I'm risking about $1,100 to make up to 2,400 bucks. You know, risk reward wise, like not terrible, right? I make 2,400 bucks. I risk 1,100. It's about a 2.2. Now, let's say that we want to look at the pin maybe around the 6670 zone. Okay, let's delete this one for a second. I go 6670. Make sure I don't overlap my strike. So I go 40 wide here and 40 wide here. This one, I'm still risking 900 bucks to make $3,000. Well, it pays more, but it's still $1,000 risk. So even if I win on the first trade, I would be winning the first trade for maybe $1,500, right? But I'm still risking 900 on this one to lose. There's a bit of an overlap, maybe briefly, barely, but that's the hard part. Is like if you put like 2 or 3 or 4 of these trades, sometimes the math is like you win one and you kind of break even for the day, and that's better than losing. I will admit, like it's better than losing, but that's what frustrated me about getting into like more of like I'm doing butterfly spreads on the regular. I'm doing a lot of butterfly spreads and I'm stacking in 3, 4 a day because ultimately it's like I have one winner. It covers my risk on everything and I pretty much break even on the day, which again is not a bad result. But the point is like, let's make money. So I don't know. I think there's just some more, digging that I want to do. I mean, I know a couple of traders that there's one guy that was on Theta Profits that turned like a couple hundred grand into like several $1,000,000. But then he also almost blew up his account and lost like 30, 40, 50% of it. So I mean, all he did is every 10 to 20 point move in the index, he would just put on another iron fly. And I don't know if he had them tighter, like maybe he had like 20 wide iron flies and put on 3, 4, 5 a day. It's just, but it's that's the strategy you have to focus on, and like that's not me. I like butterfly spreads, I really do, but when I get to that habit of like, okay, I'm going to put in traps every single day, I really need to watch the thing all day and manage it into the close because all the magic of those butterflies is at the end of the day. That's when you get all your money. So in the final, literally 30 minutes of the day, price is either coming into your pin prices or it's not. And that's where you find out, whether your trade's going to win or lose. And so it becomes like an all or nothing type day. And obviously, if the market is going to still move directionally further than you think, which is probably going to happen maybe 10 to 15% of the time, it'll move further than you think. Your iron flies are toast because there is no expected move. And then you're guessing like that the market's going to move, and I don't know. It's just like anything else. It's not perfect. Nothing's freaking perfect. You know. On take or Thinkorswim, it's only offered 1030. What are the strikes? So again, I mean, 6,700 seems to be a decent level. I'm just curious, like maybe a 6 round, but look at what's happening in real time right now. Right now, my 6,650 is starting to show up as like this seems like maybe a gettable price for the bears today if the market's going to come in and poke the lows and make some fresh lows. I do have a couple of other levels I think I'd be interested in paying attention to. Let me find them right here. You can write these levels down. 66.25. 66.25. That should be a hard level for price to get to today, but I've got gamma at 66.50. So 66.25 could be a test. And again, my defense would be around that 6600 handle, which is going to be way down here. I mean, we have to see price get from a gap up and move up. Now we'd have to go all the way down to fresh lows, because the low we've had this week was Monday at 66.36. So if the market wants to take out that low, 66.25 to 6600 is maybe a gettable spot, right? Because I mean, right now it looks like the upside is very safe. It looks like the upside is pretty safe today. I mean, I don't know if premium is going to be any decent. If I can sell some more premium here, I mean, maybe. I'm already stacked up pretty aggressively here. Could I do another bear call spread? Maybe get another $50. It's like I don't want to risk another $1,000. So probably not. If I stack up another couple of, it's like I get another $100. Price has to stay below 67.60. I'd rather not. Just in case, not worth it. But looking at our call and put option volume sentiment, it's pretty much a tie. So I would say the market right now is just kind of staying in between these levels. 37 to 31. No one side is winning. It's just a very noisy day. So there's gap fill potential. There's gap fill potential. We'll see if it just kind of ranges for the day, and the expected move drifts lower. Hopefully, we just win the range that we traded this morning. Ellen, no, I've got two defense trades at the bottom. So I still have them both. This is a pending order. This is a filled trade. This one only cost me 5 cents. This one I'm trying to get credit for it. I don't think it's going to give me any credit, but let me see. Right now, I mean, it's trading for $1. I'm not going to take the trade for $1 debit. I want the trade to be like 20 cents debit or less, 10 cents debit or less, or any credit would be great. I just don't think we're going to get there. Let's see here. 80. I'm just looking to see if I can stack on a little bit more premium today on the call side, since prices are pretty sloppy. That's pretty a stupid trade. Yeah, I just like to. I mean, when I get opportunities where I feel like I got a pretty good read on the day, I mean, it's going to be difficult for price to get to 67.75 today. So the way I try to plan out the rest of the day would be this. Did we get filled? I didn't get filled yet. XSP. Yeah, we are close. We're close. 70 by 69 pending. I didn't get that filled yet. Is that the one you're talking about? It's close. It's trading for about 49 cents, 47 cents. I'll keep an eye on it. Okay, so we'll see if that defense kicks in. I mean, if we leak a little bit lower today, we probably will get filled in that defense trade, which I'm obviously okay with. I don't mind the defense because that's kept us out of trouble. Dollar CAD continues to run higher. Well, that's dollar strength. DXY is moving up. We're probably hitting 100 on DXY. Yeah, so we hit 100. That's not a surprise. I think this is one of the more surprising trades of 2026. Now, I'm not surprised that the market held the lows. I was long dollar there. I'm not surprised that the dollar hit the lows here and it was a fake out. But what I'm going to say is, if we don't turn now, like if the dollar does not turn now, and this dollar goes up here, that's going to be one of the more confusing. That's basically like screwing over the crowd, because the crowd has been short dollar, short dollar, short dollar. I think that positioning is showing that smarter money is likely going to try to squeeze this thing higher and search for liquidity up here. So I wouldn't be surprised if this dollar doesn't stop. The problem is, this to me is a risk off tone in the market. I think dollar getting a little little bit stronger. Okay, there's defense got filled. So I've got a defense trade on engineered options. All right, so let me update that in the tracker. That was the 70 by 69. This is now filled. I'll update this in Telegram. XSP. That's the 70. Okay. Let me make sure. Was that? Oh, that's our break even trade. So sorry, that's break even. My bad. So this is a break even level. We're not even playing defense this week. We're back to break even. Okay. So we have participation, break even, and then we'll see if defense kicks in as well. Here you go. I said jawbone. Trump, the economy will bounce right back when the Iran war is over. When? Right? When is it over? So I'm telling you, like when I saw this happen on Monday, well, Monday was this, right? Monday was the war is almost over, and the market loved it. Look, I don't think the market is certain after the pump on Monday and then a quick fade because we have they're putting bombs in the Strait of Hormuz and it's not over yet, and there's Iran supreme leader. Blah, it's like all the stuff is still happening. It's still noisy. It's not over, right? You'll probably hear Trump continue to talk about it. So two things: if oil prices aren't going down and our markets are not ripping to the upside, then the market is clearly ignoring some of that noise right now. And so if we keep leaking lower, Trump might keep talking about it, but we basically have to end whatever this conflict is. Whatever this is going to become, we have to, button it up. Okay. So we'll see what it ultimately leads to, but I just think that Trump is going to be a very vocal cheerleader to the markets, and we will see if the markets respond to it. He has its moments. I mean, I've never in 25 years, I've never seen one person outside of maybe Ben Bernanke in a financial crisis situation. I've never seen one person that can say one thing and the market loves it that much or hates it that much. And Trump is that guy. So it's pretty wild. Like, it's that's why when he's on the economic calendar, it's like, well, something might happen. But what annoyed me on Monday is he was supposed to be on the calendar at 5:30 p.m. Eastern time, not speaking at 3:15, and that got leaked early, or he was on early. So it is what it is. But we just trade. We got to trade. Okay. So Sean says Trump is speaking. It's like, okay. I mean, he obviously the guy has lots of outlets. He's got Truth Social. He's got any media outlet he wants. He's got Fox News. He can talk whenever he wants. But I look at price action today. So to say like the U.S. market's going to rip when the Iran war is over, the market might be thinking, well, when is this war going to be over? Because right now it's not over, and the markets are taking it like, yeah. I mean, give us a deadline. Tell us when we're done. So we'll see what happens. But for the week, we know that the low for the week is around 66.36. Okay. And if the market is interested in going after that, that's okay. I'm looking to see, can I defend this area if needed? Because between this green line and this green line, I can get paid inside this range today. That's a pretty big range, right? That's a pretty big range. With 6,700 pin, that would be set up as a credit, Tony. If you take the trade, that's an iron butterfly. So you're basically selling the body. So you'd sell like 67 call, sell a 67 put, and then you buy the wings. So if you went like 35 or 40 wide, again, I'm not taking that trade. I'm saying if you think we're going to pin around 6,700, there's about a 2.2 to 1 reward to risk today. And you need price to stay within about 28 to $29 of 6,700. So if we close between about 67, let's say 25 and 66.75, you've got, cash settled, you can make, a couple $1,000 on the day. That's a good win. But if price slips lower, slips higher, then you're risking about $1,000. All right. It's offering 885 credit. What? Well, we are. Well, that can't be right. It should be offering more. If we're talking SPX, now right now you're technically taking a trade that's slightly out of the money. So if I try to pin this thing at 6,700, and I want to go, let's just go 40 wide. Let's turn this around. So 6,700, 40 wide, and 40 wide. It's offering $29. So you're risking 1,100 to make 2,900. If this fills at $29 credit, that's the most I can make, and that's the risk because I'm 40 wide. So $40 wide minus 29 is $1,100. That's my risk. But I would need price to stay within $29 of my sell strikes. So my break even is 67.29, 67.29, and 66.71. If price cash settled in here, then there is a profit trap to make money. But if price is lower or higher, you are risking this. Full risk is further than 66.60, or full risk is further than 67.40. And the reality is, I don't know where it's going to go. I don't know if price is going to go lower or higher. I do think that we maybe bounce between, 66.50. Like if we come down and hit 66.50 and then we bounce back up, I could see us between 66.50 to 6,700 today. Part of me wonders, if we're somewhere in here for the day, maybe a pin around 75, go up high enough and low enough that you can catch a profit trap. Again, I don't know if that's going to be good or bad. And I'm just spitballing here. It's a couple examples. But if I thought between 75 and let's go, 15 is 40 wide and 35. So that's 40 wide, same thing. I get $28. I'm risking about $1,200 to make $2,800. If it finishes, let's say we settle, let's say price is at 6,700. Okay. That's $25. I could still make $300 on the trade. If it settles at 50, that's 25. I still make $300 on the trade. If it's inside of 50 to 6,700, I would make, on the low end about $300. And then it gets better from there and it maxes out around $28. If somehow we're close to that 66.75, like middle zone. It's just a guess. I still I don't know. And I think that's a lot of risk to throw at it for a guess. That's why when I'm trading like I am today, it's like I'm trading something higher probability where it's like, yeah, I don't think that prices will come to these lows today, which is why I have puts down here. I don't think price will come to these highs, which is why I have calls up here. And that's my trade for today. So we'll see how the rest of the day plays out. I'll get this out of the way. Keep an eye on my levels. Chart alarms are set. That's all I can do right now. I'm just controlling my trade and risk is set. NVIDIA, somebody saying NVIDIA looks like it's going to break out. I did put those pending orders. NVIDIA is, that's a big maybe, right? I talked about this yesterday. I put in those bonus trades. Who was with me yesterday morning? Yesterday morning, bonus trades on NVIDIA. I've got to find it here in Telegram. They're not filled yet. Bonus trades. I put in a June broke wing butterfly and a June broke wing butterfly, two separate levels. Pin price at 165, pin price at 148. I think those are good, strong levels to see some bid coming. So basically, if the lows are defended, this is about the 170 handle. So if 170 catches a bid, or we fall to this previous resistance and we catch a bid, I'm looking to see, let's get this noise over with and see if these markets catch a little bit of a correction. One thing that wouldn't surprise me would be high, low, lower, high, lower, low, hit some symmetry. This is like textbook technicals here. Take this low to high. You put in a topping pattern. All this market does is find symmetry. If anybody's heard of harmonic patterns, this is what it could be. X, A, B, C, D. There's your trade. You want to buy it in here, you take it back up to the merge, or you take it back up to this continuation of the trend, because after all, it's a stock. And if the market broadly is bullish or neutral, this is probably a chance to buy that symmetry around that like 5-0 pullback. So I think those trades are looking good, but we need to see price, maybe test this 170 level to get filled. So pending orders. Okay. We just broke some intraday lows here on the SPX. Let me take a look and see if we're getting any. Nope, that put side is still offering debits only. That's lame. I mean, it's still defense. We still got defense for $1,500. Here's my puts. We're still out of the way. I mean, this is a strike that I'm most paying attention to, is this one. Is trying to see if price will stay above 6,600. Okay, pending like this. I mean, I guess I could go 20 wide. Let me see what 20 wide looks like. So if I went 20 to 6,600, that's 20 wide, 30 wide. Like that's a cheaper debit. But again, it's like, I don't want to pay another 50 cents. I want credit for this trade. So 25, there's 20. I'll just leave this alone. I'll just monitor this. Let me see if I go 25, maybe this one. It's still a debit. Yeah, I'm not taking it for a debit. It's going to hang in there. Okay, good stuff. All right, let's do this. A couple things, housekeeping for me, and then I've got a stream for you to run on engineered options, which do have some trades running right now. We have our participation, which is right up here around 673. We have a break even that got filled today. I'm looking at defense, possibly around the 660 zone, or maybe even the 653 zone. We'll see what happens. I mean, if the market comes down here and then bounces next week, if we get another defense trade in, we land another winner. We've been surviving with good wins on engineered options because of defense. This week is no exception. So we'll see how the market looks like. Big picture, we're still probably looking down to tag. We're probably looking to tag on NASDAQ and S&P, probably going to tag that 200-day moving average. Not today. I'm just saying, like, in general, that's probably where the market is likely going to fall towards. Okay. What I think is interesting today is that this is right around 6,600. So it wouldn't surprise me if we get there. That's another big fall. We'd have to drop another like 60 points or so to get there today. But if we drop down here, that market's probably going to bounce by the end of the day. Okay. So also not a bad way to look at, like, we might get a quick stab to bounce off that 6,600 handle. I think that's a pretty solid. And if it's not today, like I would be looking to bet on a quick Monday or Tuesday bounce. But again, price may not even get there today. It might just be more noise from that Monday low. All right, couple more things. So we'll play off little engineered options. The expected move indicator, I've got a lot of emails to get to. I will do that as soon as we wrap up the session here. So if you want to stick around for little engineered options, we'll run a little stream on that. The expected move box, what comes with that? I also have an 18-minute video. Let me go Vimeo. I'll show you a little video here. There it is. So 18 minutes just to walk you through exactly what I do day to day with this expected move box. You can trade it on your favorite index, your favorite stock, oil, gold, silver, futures. It works. Just give it a timestamp. It references a 9:30 starting point. So usually I'm always looking to trade around opening bell New York time. But anyway, if you want to email me, chrispulverpub@gmail.com, chrispulverpub@gmail.com, ask me about the expected move. I will send you the link. It's $20. And I'll get you for access in TradingView, and I'll send you the grid link to share and download inside of your Thinkorswim. So if you want it for Thinkorswim or TradingView, it's $20. Okay. All right. Trade session. Do I have anybody that's new today? Is anybody new? If I have anybody that's brand new, one way to get started, I've got some free foundational stuff. Practical Options Quick Guide for $27. One Trade Mastery free session. It's 70 minutes of, here's a way to look at a stock. that you like. You want to trade it up. Here's 3 comparisons. Buy a call, do a bull call spread, do a credit spread. Same narrative. I'm bullish on this stock. 3 different ways to trade it. Risk reward, break even cost, total cost to you. It's kind of a good session to pull back the curtain of like, what is an option, like why are options good? I'll show you in that video. So you can have that video if you want for free. I put this almost every day in Zoom. So let's go copy this. This is One Trade Mastery. One Trade Mastery. All right, there's a direct play link. So Wayne, you can throw that in a browser and check that out. Like I said, 70 minutes. You can watch it at your convenience. But if that kind of gets you a little bit excited about trading some options, that makes a lot of sense. I can really define my risk and control my risk. Absolutely, you can. And trading options to me is all about making a calculated bet up, down, sideways in the market, and you just trade. You just trade. Last year, I think between all my accounts, I probably logged close to 25 or 30,000 trades. I'm an active trader. Okay. I'm always pruning. I'm always checking. I'm always, dabbling. I'm always adjusting. That's what comes with the territory. I've been doing this for a long time, but it's just really, what is my story of the trade? Do I want to be bullish or bearish, or I think it's going to be more neutral? And we can figure out how to trade it. If you don't know what's going to happen, but you think there's going to be direction, well, I have an entire, scanner built around trades that are likely to give us direction. So we trade both ways. I don't care what the market does. It just goes somewhere. Go somewhere. Right? All right. Anyway, let's do this. Deanna, I'm going to send you a quick message here. All right. Okay, cool. All right, so let's start a little engineered option stream. If you want to send me some emails, that's great. chrispulverpub@gmail.com, expected move box. Just type in the subject line, expected move, or send me the indicator. I'll get the link to that. So it's chrispulverpub@gmail.com. And I'll send you those links today. I will have my computer with me this weekend. I'm traveling today. We're going to California for the weekend to get a little quick baby moon. It's we were thinking Hawaii, which would be awesome, but to go for just a weekend is a little much. So we thought if we're going to go to Hawaii, we might as well do it the right way and be gone for like a week. So we're just going to do San Luis Obispo tomorrow. Have a little activity plan, play some golf, hang out at the pool, some beach stuff. I've never been there. My fiance loves it. She says it's really beautiful. So we'll check it out. But I'll have my computer with me. So if I've got more people emailing me for the expected move box, I'll be able to take care of that. No problem. And enjoy some engineered options. I'll see you soon. Thanks, everybody.